You have a lot of momentum in the markets. You have a lot of exuberance building in the markets right now. So that's, that you want to remain long bias at this point, but at some point you will have a correction and you can put more capital to work.
Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you back here at the end of another week for another weekly market recap with my good friend, the bellicose portfolio manager, Lance Roberts. Lance, how you doing?
Bellicose.
Bellicose, yep.
I immediately think about Dracula when you say that word.
Really, well, bellicose actually more from bellum, war, the Latin word for war. There's going to be a warlike theme throughout today's discussion, and if we get to the rant, that'll all make more sense. But I mean, we're starting off here, Lance. Look, war themes everywhere this week. Can't ignore the elephant in the room in the past, like 20 hours, but
Yeah.
we've had Elon Musk and President Trump go to war very publicly on social media.
Which I think is absolutely hysterical.
Yeah, I'm sure we'll talk about it in just a second.
Yeah.
We've obviously got the U.S.-China trade war continuing to run at white hot speed here. But there has been some development there with both Trump and Xi talking directly. Sadly, we've had an escalation in the Russia-Ukraine war, as Ukraine did the drone strikes on the Russian bomber fleet. And then last night, we began to see some, big retaliation from Russia in response to that. So it's just sort of war everywhere these days. Look, I'm sure by the time we're done recording this, Lance, there's going to be like 5 zillion updates to the whole Elon Trump thing, and it seems like
Sure.
maybe they're cooling off a little bit, letting tempers cool off at least a little bit here. But let me just ask you this. We talked a tiny bit about this last week, but like, which side should we be rooting on, do you think, here in the big, beautiful bill? Is it, an abominative pork fest, as Elon is saying here? Is it the best that can be done right now, just given the limitations of the Congress that we have, as Trump says right now? Is it somewhere in the middle? What do you think?
Well, as I've been saying for the last month or so, and particularly we've talked about this numerous times on on the Real Investment Show during the week, is that everybody's kind of all wrapped up around this bill like they think it's actually going to pass. And you got to remember the bill when it was so there's a process in government, right, that most people don't understand with bills. So the House drafts up a bill and they pass it. Well, they passed this bill by one vote. So then it goes to the Senate. And right now in the Senate, there's still a very narrow margin between Republicans and Democrats in the Senate. So they can't really afford to change much in that bill and get it passed. But there's pushback from people like Rand Paul, et cetera, that are very likely going to want to change things in the bill. There's also things in the bill that don't pass the Byrd rule as well. So the bottom line, don't worry about all that stuff, but the bottom line is if they make one change to the bill, just one of whatever it is, it's got to go back to the House
Right.
in terms of reconciliation to get passed again. And then if they make one change in the Senate that loses one vote in the House, bill doesn't pass. So the reality of this is at the end of the day is that most likely there is a very high probability that all this hand wringing over the bill and the deficit and all this other stuff, it's not going to pass. We're going to wind up with a basic continuing resolution just to fund last year's spending. You add 8% to that, and we go forward in October to make sure we can continue to fund the government. And this bill, has to get completely rewritten at some point, broken down into parts. However, it finally gets passed. Maybe much later on. And then, of course, don't forget, you've got midterm elections coming up, and there's enough pushback by conservatives on this bill that maybe that puts some of these seats at risk come midterm elections next year, that we start to see more conservatives back up on passing this big, beautiful bill. Because it really is just, it's a lot of spending. A lot of it's just continuation of previous spending. And kind of the whole point of DOGE and all this other stuff was to actually enact some spending cuts in government. And of course, Doge did a good job of that. They did find, a couple $100 billion worth of cuts, but those are not being, incorporated into the bill because, again, what Doge needs to be is it actually needs to be codified through Congress so that these cuts and the process of Doge can actually be a more permanent part of government.
Yeah, so as I understand it, which is not complete, so take this with a big grain of salt, is that the type of bill that this is, it's not the type of bill where they can codify the Doge cuts, that has to go through a separate process.
That's
So,
right.
listening to the administration sort of explain this, what I'm hearing, and again, there's a ton of dust in the air, is like, hey, we get in many ways a lot of the things that Elon's worried about. We've done the absolute best that we can, given the type of bill this is and the guys that we need to get to vote on the things that we need to get to vote for. So to your point, Lance, I don't know, this may not be a big bill at the end of the day. And as Elon, tweeted the other day, he's not sure a bill can be beautiful and big. You got to kind of pick one or the other, right? And
Well, this has long been my argument about the problems with Congress, which is that we haven't passed an actual budget since Obama took office, right? That's since 2008, we have not had a budget. All we've done is continuing resolutions.
right.
The problem with continuing resolutions is all you do is you take last year's spending, you tack 8% on it, and Rule of 72 says you're doubling your spending every year. And that's why we are where we are in terms of the debt and the deficit and all these other concerns. So previous to World War I, every spending act by Congress had to be done in one bill. So if you wanted to fund a bridge, that was a bill. If you wanted to fund a road, that was a bill, right? If you wanted to fund Social Security,
Right.
that was a bill. And
you
so
couldn't bundle. Yeah.
every spending item was one bill that had to be voted on. Well, because of World War I and then, of course, World War II, there was so much spending that had to be done at one time to fund the war. They just said, okay, look, let's just bundle a lot of this stuff together and we can just get this passed at one time. It's more expedient. Made sense at the time, but then it just became habit. And now, of course, everybody knows the problem with these bills is that once you get a 3,000-page bill, nobody's reading these things anyway. And buried in that is all these spending on programs and other stuff that most people would not agree with. But in order to get a Democrat from Virginia and a Republican from Florida and a Democrat from California and a Republican from Texas to all vote for this bill, everybody's got to get something out of it. And this is the whole process, the problem with the dog ears and, of course, the giveaways that occur. And it's all just trying to buy the votes, right? And instead of, and this has always been my issue with government. I think this is a lot of people's issue in general with the way government operates now, is that kind of senators and congressmen are bought and paid for by the special interest groups, lobbies, these type of things, rather than them doing their job of voting on what's best for the country and for government in general.
Right. And look, I don't know. My guess is the administration's kind of point of view on this is probably like, totally agree with you, Lance, but we have you don't go to war with the army you want, you go to the war with the army you have. We've got this government the way that it is. And so we have to kind of, if we want to make change happen, we got to initially make it using what we got here.
No,
and the people that we
I
have.
don't disagree. It's a huge problem.
I know you don't, and I'm not trying to carry water for the administration here by any stretch. But let me ask this. So the one thing about this is that I don't think can sort of just slump back into business as usual. Like to your point of like, this kind of devolves and, we're going to eventually break this thing up into different bills and they're going to take their time and whatever, right? Is the expiration of the tax cuts. I don't think anybody, well, maybe we should talk about this, but if the tax cuts were not to get renewed, it would be, at least as the administration say, the single largest tax hike on the American people in history, right?
Yep.
And certainly, no Republican wants that. And I don't think the Democrats want to have that happen on their watch too, as much as they would love to stick it to this administration. So my question to you is should we expect that whatever happens over the next couple of months, some version of this that at least makes the tax cuts permanent gets passed?
Yeah, I think, and that's what I'm saying. They may have to break this thing up into a couple of different pieces and say, okay, we couldn't pass the big beautiful bill. We're just going to have to pass a bill. So we're going to focus on this bill being around tax cuts and the extension of the TCJA. And of course, then there we'll have to get into that bill and find out what all they had to put into the bill just to get that passed, right? So there'll be a whole bunch of spending on stuff that has nothing to do with passing tax cuts, inside that bill. So my whole point is look, I don't know how this winds up. All I'm saying is that you've got one vote to spare in the House, and any change to the big beautiful bill in the Senate, if well, they haven't even taken it up yet, but if they take it up and they have to make various changes because of the Byrd rule or because of just pushback from conservative senators in the Senate, and they have to make changes to get the big beautiful bill passed in the Senate, it then has to go back to the House, and you really run a big risk of losing that one vote margin. And that's really my whole point, is that the margins are so narrow that there's a real risk. I'm not saying it's an impossibility. It could go back to the House and they could get it passed, right? I'm just saying is that there's a real risk that with such slim margins on both sides, that the passage of this bill is certainly not going to be nearly as easy or as certain as I think a lot of the media is taking it. Again, right now the media is jumping all over the fact that the CBO says it's going to increase the deficit by X. Of course, as we talked about last week, just massive problems with the CBO. They don't include, like for instance, we've already had 300 billion or so, something like that, in tariffs. That's not included in the revenue projections of the CBO. Economic growth from the extension of the tax cuts, the spending, et cetera, that's not included by the CBO. So if you look at the OMB, they actually say it'll reduce the deficit by 1.4 trillion. So, again, just depends on who you pay attention to, but tons of flaws in the CBO estimates that don't make these things nearly as dire as they tend to turn out to be.
Yeah. Well, it'll be really interesting. And look, there is some value in the pushback that's going on right now. What's interesting is this pushback's kind of coming from within the party, right, or within the MAGA movement, right? Because Elon was part of Trump's team up until a couple days ago. And too early to really tell on this, but I am seeing a bit of the administration trying to come out and at least trying, maybe through gritted teeth, saying, hey, we understand the issues, but let's talk about why this is the best we can get done now, right? Where there is some benefit to kind of this public defense of what's going on. It gets the conversation out there in the public, and it kind of helps us more than often, more than what usually goes on, kind of understand what's in this bill a little bit more. Normally, we, the public, have no idea what's in these massive stacks, right? So anyways, I'm going to hope I'm going to hope that maybe this just sort of, it's a little bit more of a healthy process in terms of how a big bill like this gets passed. And I did put out a tweet the other day, which no matter what happens from here, right? I said, I'm kind of feeling this strange emotional high of the fact that fiscal responsibility is suddenly becoming seen as sexy or like a patriotic duty here. And these are topics that you and I have talked about forever. But debt control, beginning to get deficits under control, beginning to rein in our reckless spending and whatnot. Again, this thing could end poorly in the near term. There's probably a dozen ways it could. But the fact that it's kind of highlighting to the national awareness that, what, we actually do have to pay attention to the fiscal side of the house. Like that, I think, is a positive here. I think, maybe I'm being a little too naive here, but I think that is now getting put on the table in a way that will be harder to memory hole in the future. Congress kind of depends on, our government kind of depends on we, the people, kind of losing interest when things get mathy and just letting them go off and do their own thing. I'm going to hold on to this kernel of hope here that maybe fiscal responsibility has been elevated to a level now where the public's going to hold on to that, and that is going to become more of a factor just in terms of who we elect to public office in the future.
Well, it's a good kernel of hope, but unfortunately, considering that you now have to do YouTube shorts to try to get people to pay attention to something, is the real problem. Just there's no attention span for this stuff. But I do think I do think that President Trump made a crucial mistake in starting this spat with Elon, because Elon's got a lot of people that follow and listen to him. He's a very smart guy. And, out of all the guys that you could pick a fight with, this is the guy that supported you into office, did a lot of good work for you as a special, as a special employee of the government. A much better way to have handled this is saying, reach out to Elon and say, look, I know you disagree with the big, beautiful bill. Let's have a conversation about what's actually in it, what you disagree with, why it's in there, and the better parts of the bill that we're trying to get passed to get to our end goal of agenda. Yes, I know it increases spending now, but if we increase the spending now, if we get accelerated economic growth, that spending won't matter in the course of the next few years. And and again, because there's a huge misunderstanding about the deficit and how the deficit works, and why the deficit is very important. And if you just start trying to whack-a-mole at the deficit, you're going to put the U.S. economy into a massive recession. And that's the one thing that the administration understands that they need to avoid.
Yeah, so a couple of things on that. First off, I do believe, having seen this morning, I think there is a call between the
Yeah,
White House and Elon later today. So I think they are trying to
well, no,
do.
it needs to be public. This needs to be a public conversation. Like, they need to sit down in the Oval Office and have a conversation that's public
I would
and
love
not
that.
just behind the scenes.
Yeah, I would absolutely love it were that to happen.
Yeah.
I will say too
Get
that
Joe
there,
Rogan to moderate.
yeah, and both of them I think would be comfortable with that. To be
Yeah.
honest, at least with Joe Rogan as the moderator. Um, uh, Now I will say there has been a lot of discussion around what's been going on of like, is this just scripted? Was this like a pre-agreement? We're going to go good cop, bad cop, and Elon, you really put pressure here so that the Republicans that aren't lining up behind this bill line up behind it more, type of deal. I don't know. I think this was a little too thermonuclear
Yeah.
to be
I don't,
that,
yeah.
but who
I
knows?
don't think anybody's playing that level of 4D chess. And and again, there's a lot of conservative Republicans that, you know,
Yeah,
really
Thomas
kind of follow.
Massey, Rand
I mean,
Paul.
they
Yeah,
really support Elon Musk, right? I mean,
yeah.
there's a lot of conservative Republicans that really support him, and so they certainly listen to him.
Yeah,
So
and
I'm
so,
not
so
sure
to,
that. Yeah,
to your point earlier too about don't pick a fight with this dude. I mean, one, he's the richest guy in the world. Two, he's kind of proven, he doesn't really care what public opinion is. He's going to do what he thinks is right.
yeah,
Obviously, he's probably pretty pissed that, I just uh, took a lot of my time to A, help you get elected, and B, spend time on Doge and recruit all these people into it. And then now I'm
yeah,
seeing all this spending. Like, what the hell did I just spend all this time doing if you're just going to undo it, right?
yeah,
But apparently he tweeted out, hey, Trump's only got 3.5 years left. I'm going to be around for decades, right? So a little bit like, if don't screw with me because this is important to me and I've got a ton of money and a ton of time.
yeah. No, and like I said, it's like, just look, optics wise, it was a bad move to pick the fight because, again, if you like Trump but you love Elon, right? Just as an example, picking that fight right there just took everybody that liked you as president and just gave them over to Elon Musk, because now they're going to go defend the guy they really admire more, right? Or vice versa, So picking the fight optically was, they should have done it if they want to have a fight, should have done it behind closed doors, sit down, have a meeting between themselves, solve the problem, and move on. But this very public dispute over, and this has always been my huge complaint of President Trump. Like him, love him, hate him, whatever is your opinion. But his use of social media, it was terrible in his first administration. He caused so much rift and divide because of his social media outbursts. And then when he uses his social media platform now, he's been a lot more tame. I think he's learned some lessons. But picking this fight through social media made it too visual, too optics, and you just took everybody that was supporting you but really like Elon Musk for what he's doing, et cetera, and you just move that whole support base across the board, and that's not good for you.
Yeah, so let me ask you about this, which is, so, Trump is, back to my war theme, he's fighting wars on a ton of fronts, right?
Right.
Um,
Don't add another one.
yeah, exactly. And that's sort of my whole point here is do you think this materially handicaps Trump's odds for success on everything else? In other words, does literally the rest of the world, because he's trying to renegotiate all these trade deals, et cetera, do they sense sort of weakness here? Like, oh gosh, if one of his key supporters is now kind of turning on him here, then maybe I can get away with more, I can push back harder on Trump because he is wounded, distracted, whatever.
Yeah. No, that's what I'm saying is that, you said when you have such a slim margin to pass the bill to begin with, you just run the risk that, okay, so you had a few you were able to obtain a few Democrats to support the big beautiful bill in the House, right? That's how they got it through the House by one vote, right? They had to get some Democrat votes for that. But let's just assume that one of those votes was a Democrat from some state and wasn't a huge fan, had lost a lot of their fan base for Elon because of his support of President Trump. But all of a sudden now they see this rift. And it's like, okay, look, I'm going to go, I can go, I'm going to back Elon in this deal because it impairs President Trump. So that's good for, that's good for my base. So they lose votes potentially just because of the argument that might have happened otherwise. So again, I'm just saying that, and look, we're just postulating here. We don't know. I'm just saying that this, given that the such a slim majority in the House that you had to pass the bill, that they're going to have to come back to reconciliation anyway. Anything you do that puts risk on losing votes on your bill puts your whole process at risk, and that's what's happening right now.
Yeah. So what's interesting is this is a good segue to now talking about the markets. The theme of 2025 so far has been uncertainty, right?
Mm-hmm.
And obviously something like the past 24 hours, just stirs up uncertainty even further, right?
Yep.
Markets don't seem to be caring about it right now. As you and I were talking, we've reclaimed S&P 6,000. So let's talk about that in just a second. I just want to note one thing, just because you mentioned it. It's a bit tangential, but you talked about how fiscal responsibility is a hard thing to engage the American public on in general. Totally agree.
Yeah.
Certainly in a world of TikTok shorts, totally agree. What is interesting though is I just reached out and invited on a young woman. Haven't heard back from her, so don't know if she's going to accept the invitation to come on here. But her name's Kyla Scanlon, and she is a Gen Zer who has built a really big following on TikTok.
Right.
Around financial literacy, like literally talking about a lot of the same stuff we do. She doesn't really dumb it down that much for her audience. So I just want to note that maybe there's some glimmer of hope that some members of the younger generation are beginning to figure out how to use these new platforms to engage people on things that I think are a little more financially nutritious. I'd kind of written off TikTok at large, but who knows?
No, it's true. There's a lot of things going on TikTok right now that, relating to investing and financing. It's interesting that a lot of the younger Gen Z crowd, they're more interested in, there's kind of broken down a couple of groups, but there's a big chunk of them that are more interested in more stable savings, saving money, being financially, responsible, that type of thing. Then there's this whole other side that's, speculative trading, day trading, et cetera. But again, the long form blogs, the long form articles, the long form videos that you and I are doing, that's on its way out. They want stuff encapsulated in 1 to 3 minutes, and that's how she's been able to build a very good. She's actually on my feed, and she's built a very good base of viewers around these very short clips about, hey, this is how you buy a piece of insurance or whatever it is, right? But it's 1 to 3 minutes, in and out, done. And that's what this younger generations want. They just don't have they don't have the tolerance to really learn the drivers behind things, because you just can't encapsulate what drives markets into 1 to 3 minutes. So you just say, hey, buy the market, it's going up.
Right.
Markets go up over time, buy and hold.
Right.
They don't understand the dynamics because you can't encapsulate that education into a 1 minute video. But that's how they're driving their future and financial literacy, by little nips and bites, kind of at the relevant.
Right. So I'm going to disagree slightly with something you said. I agree with almost everything you said, but I don't think the long form is on the way out. And I think that that's a false.
It's dead.
You always talk about narratives, right? And I think that's a false narrative. I think there will always be a need for it. I think people are going to find their way to it differently. And in this generation, Lance, I think you're right. What she is out there is she's creating the starter kit. right? This is
Mhm.
the on-ramp. This is how you begin to realize that these things exist, why they're important. You begin to get your initial introduction to a concept. But then if you want to really understand it, you need to have some medium that really gets you into the deep weeds of it.
So, all right.
That's where I'll live until then.
All right. So let's run a little challenge right now.
Yeah.
So if you're listening to this video right now, put your age in the comments. Now, what I will bet you lunch. I'll send you a gift card for whatever lunch place you want to go. I will bet you that the vast majority of the people that are listening to this video right now are over the age of 40.
Oh, folks, you don't need to do that. I know the answer to this. I mean, YouTube gives
Yeah.
me the demographics, Lance. No, no, no. I've always told you that 2/3 of this audience is 45 and older. No,
Yeah,
absolutely.
because 2/3 of the audience, us older people, we like the long form stuff. We'll read an article, we'll do the research, we'll listen to the videos. Young
Right.
people don't do that anymore. So
No, I know. But my point
it's
is, by the
yeah,
time they are 45 and older, they will have migrated more to this stuff because
no,
they will know they need it and they'll want it
no,
more. All right. Well,
no, they won't
we'll have this
because
bet, and when you're 85 and I'm 80, we will figure out who wins.
okay, you got it because again, you're teaching people to learn in a specific manner. And that's not going to change later in life, right? So if they learn to, if their whole ability to learn is in 1 to 3 minute videos, that's going to be your platform in the future. Right? That's
Yeah.
just a function of you're indoctrinating people to learn this way.
Yeah, we'll let the audience figure it out. And I don't disagree that the way people learn is evolving. I am still holding on. Maybe it's a belief, but I think millennia of knowledge passing along has proven that if you really want to master something, you end up
Yeah.
having to really saturate yourself in it. And
Yeah.
again, we are providing an on-ramp where people can get exposed to it, learn a little more. But at some point, when they say, "Look, I'm going to commit to learning," you're going to have some sort of long form. Is it going to be a guy like me in front of a camera for an hour? Who knows? Maybe it's a virtual
No,
thing you work on and you're in some, metaverse type thing, but
it'll be an
it'll be
AI
more than three
generated
minutes.
model of you because you'll be dead. So will I.
Right, right.
And
But
those
but
will
it'll
be
be more
AI
than 3 minutes
generated
long.
models talking. Yeah.
Yeah. Yeah. All right. So, folks, feel free to place your bets on whether you think Lance or me is going to win there. All right. So, but getting back to the segue here.
Yeah.
So, even though uncertainty has kind of spiked in the past 24 hours, and again, like I said, not just the Elon Musk Trump thing, but also Russia retaliating pretty hard against Ukraine and whatnot. Um, Markets don't care. We're back at
Nope.
S&P 6,000, and you'd said the previous couple of weeks, hey, stocks are overbought in the short term. A pullback
Mhm.
is likely. Market hasn't certainly seemed to sort of care about that in the
Nope.
immediate term. Do you still feel the same way, or have things changed technically where you think that maybe we've got room to run here?
No. It's, we're still long equities right now. We added equities back on April the 9th, and, those have been performing well. And again, yes, market's overbought. You're going to get a correction here at some point. And the problem with that is always the case is that it can take weeks or maybe even a couple months before that pullback happens because you have so much momentum in the markets. And right now we have a tremendous amount of momentum. Breadth is improving sharply. Your New York Stock Exchange advanced decline line just broke out to a brand new high. So you've got a lot of momentum behind stocks right now. And then, of course, as stocks continue to go up, that's just drawing more and more money into the markets. And, don't forget, we've talked about how professionals are way underweighted equities. They've got to get money allocated back to markets. And so they're getting drug in, kicking and streaming at this point to get money allocated back to the Mag 7 and particularly in the Mag 7, but in other areas of the market as well. So they were super underweight tech. They've got to get those tech allocations up, and that's what's been going on here. So no, it's all very bullish. This move today, if we can hold it, so very quickly, we haven't gone anywhere in the markets since May the 12th, right? Today is what, June the 6th. So since May the 12th, the markets have literally gone nowhere. We traded up and down in a range, but today's actions, if Friday, now we were going to break out yesterday, and then the market failed at the end of the day, and we closed back at basically flatline yesterday because of this whole Trump-Elon feud. This market opened up very sharply this morning on the employment report and the resolution of the Elon Trump feud. Market opened up pretty sharply this morning, but we're fading. So we're early in the day right now, but we were above 6,000. And as we're speaking here, it's currently about 10:30 Central Time. Markets are back below 6,000. So if we give up this early market gain today, we're going to wind up near flat. We're still going to be in this consolidation range. However, if we do break out today of this consolidation from May the 12th, the next stop is going to be 6,100. So basically be flirting with all-time highs because there's no resistance between the top of this consolidation range and 6,100. So that's a very real possibility at this point. As we said before, the correction from April is over. This is not a bear market rally. This is not going to fail to go back down to new lows. At some point, you're going to have a pullback towards the 200-day moving average or the 50-day moving average, wherever those are at the time. And that's going to be your opportunity to allocate more capital to the markets.
All right. Sounds good and actionable. I don't know if you want to pull up
Sure.
the S&P just to show where we are on the key support lines there. I do want to note, Lance, while we've been talking here, apparently Trump has said that he is not interested in talking to Elon Musk now, saying, quote, no, I won't be speaking him for a while, I guess, but I wish him well. I'm not even thinking about Elon. He's got a problem. The poor guy's got a problem. So looks like that feud is not quite over yet and maybe still has a few more cycles to go. But
Sure.
we'll cover that for folks next week based on whatever happens between now and then. Okay, so you know, as you've said here, Lance, you think that the official correction, so April turned out not to be a bear market rally in your eyes. April was simply a correction in an otherwise intact bull market trend. You could see stocks getting back, the S&P getting up to about 6,100. But then you could see, being overbought near term, there could be some sort of pullback, which you think will be a great time to then load up on stocks for the next leg higher.
Yeah. So, and basically, if you just look at the markets, you can see we've got this resistance level from May the 12th. We broke out of it today. Again, we have to hold it. So if we close below it today, that's not going to matter. But again, there's nothing between there and 6,100. Money flows are very positive. We talked, during this entire April decline, you just had this, money flows turning negative that whole time. Really, since we saw the market kind of bottom, you had this what they call a positive divergence in money flows. Even when the market was selling off, money flows were improving. So that was telling you that bottom was forming back in early April. And since then, money flows have been very, very positive. Relative strength has improved. Momentum is extremely strong right now. So, we are in a sell signal, but it's one of these times where it's possible for overbought markets to stay overbought for longer than you think they should. So this is why I always want to be careful. Just because markets are overbought, don't just immediately sell everything. This has been a really good time for individuals that got caught in this big downdraft and again, as we talked about before, think about how you felt back on April the 9th. If you were like panicking and pulling your hair out and going, oh my gosh, I'm losing so much money, that means you have too much risk in your portfolio. So even today, this is a great opportunity to go in and trim back on stocks that are really have high beta, reduce some of your equity exposure, rebalance your portfolio, rebalance some risk, so that we are going to get another downturn. Now, whether it's, a month from now or 2 months from now or 3 months from now, whenever it is, you're going to have a pullback in markets. I mean, markets go up and down all the time. Markets just don't go straight up. So when you get overbought, on either a relative strength basis or momentum basis, take some profits because you're going to get a pullback. And more importantly, if you just kind of take a look at, where money flows are right now, money flows are kind of near where peaks of markets have been previously, and you're going to get a reversal because people are going to take profits. You're going to have some piece of news that comes out that, causes the markets to contract a bit. We're not there just yet. Again, you have a lot of momentum in the markets. You have a lot of exuberance building in the markets right now. So that's, that you want to remain long biased at this point, but at some point you will have a correction and you can put more capital to work.
Got it. And when you talk about that some point, would not surprise you, I imagine, if that correlates with the buyback blackout window beginning, correct?
Which starts on the 15th of the month.
Yeah. meaning it's coming up pretty soon.
Yep.
All right, so real quick, Lance. So how is RAA doing portfolio performance wise so far this year?
So the markets are still, a couple of percentage off those all-time highs. And if the market would close where it is right now, our portfolio will be at an all-time high for this year.
Okay, so that's on an
So we're
absolute
we're we're gonna
basis.
we're up about 4% for the year to date right now.
Okay, so you are beating your benchmarks. It's basically all I'm trying to
Beating,
find out.
we're ahead of our benchmark and ahead of the S&P.
Okay. So, as you'll sometimes see in the comment section here, Lance, some people sometimes say, Lance changes his opinion from week to week, and the
Yeah,
guy doesn't know what he's doing, right? And what I want to underscore here is, well, you seem to know what you're doing because the portfolio is doing fine. And like a couple weeks ago, even though you said, hey, we're on a sell signal, I remember around that time you took your shorts off. And I remember asking you, like, well,
yeah,
that seems kind of incongruous, right? But you explained why you did that, right? And you have been trimming some of your positions, even though, the market's
mhm,
still running here, but you're doing your gardening, as you tell us, that
yeah.
we should do. And I just want to, underscore for folks that you know, if it seems a more madness than method, there's actually a lot of method behind Lance's madness here.
Well, a lot of the people that say stuff like this, like, oh, he changes his mind from one week to the next or whatever, what they're wanting is they're wanting somebody to say, the market's about to crash. You better be out of the markets, or the market's about to go up forever and just you better buy in. And so they're wanting a binary outcome for markets. And as I just showed you a second ago, markets just don't go straight up. They don't go straight down. And so, yeah, back on April the 7th, April the 8th, we were talking about how oversold the market was, sentiment wise. It was a good buying opportunity. Wanted to put some capital to work. And then when the market rallied fairly strongly, we're taking profits. And so it seems like it's like, well, he just said buy and now he's saying sell. And we're not saying sell everything, right? We're just saying, hey, we made some money, which is our job to make money for our clients and manage risk. And markets are not binary, but people want, and this is, I get this comment a lot too, Adam, which is like, well, you can't make up your mind. Well, because the markets are different all the time. So the markets change constantly. So if you're just looking for somebody to tell you the markets are going to crash and go down by 80%, and so you better be short the market, or the markets are going to go to the moon, you just better be long stocks and hold on. That's great. It may work out for you. It may not. For me, and for the way we manage money for our clients, our goal is to make money when markets are rising and protect that capital when markets aren't. And this is and look, the market's gone basically nowhere this year. The markets are up about 1% for the year as of today, and basically been flat since the beginning of the year. And back in January, we wrote the whole Curb Your Enthusiasm article about expect a lot of volatility this year. And, that's what we're happening. And that's not over yet. This year's not over. This volatility cycle we're in is not over. We're about to get into some of the weaker months of the year coming up in August and September, potentially October. And then you get your strong period for October, November. There's going to be a lot of volatility. So there's going to be a lot of flip-flopping between now and, the end of the year about, hey, time to get out of the market, take some money off the table, time to get in the market, time to put money back to work. I guarantee when you get to October and, we're going into third quarter earnings reporting season and buybacks come back, it's going to be, hey, you need to be buying stocks now because we're in that time of the year.
Yeah, and to your point, Lance, like I think people, just humans, right? I mean, what we
Yeah,
crave is simplicity, right?
exactly.
Oh, okay, Lance said X, therefore I'm going to hang my hat on that one thing, right? Where they
Mm-hmm.
might miss all the other nuance that you put there. And that's the important thing, which is that people crave simplicity, but we're in a nuanced environment, right? And that's why I think, this is one of the reasons why I'm such a big proponent of working with a good financial advisor if you are if you're not a super experienced and successful DIY investor yourself, which I know statistically most viewers of this channel are not. Um, so, it's your job, Lance, is to play to probabilities, and it's not unlike, a field marshal, in the military, right, where you have, multiple fronts. You've got, a whole
Mm-hmm.
bunch of different objectives you're trying to achieve. And it really, at the end of the day, is all about diversification. And there are certain battles that you may plan to lose or expect to lose, right? But but looking at the totality of your war plans, what you're trying to do is win the war at the end of the day, right? And
Yeah.
so there are times where you're going to take on, hedging positions that you kind of hope don't make money, but you want to
Yeah.
have them in place in case things go against you, right? And all that type of stuff. So my point here is just that it is a nuanced game, and you got to be careful about hanging your hat on any single thing that anybody who comes on this channel says, because really what they're doing is trying to do their best to navigate a nuanced system in general, but in a year like this, where volatility is so high and uncertainty is so high as it is right now,
Yeah.
that things are, they are nuanced. And
Yeah.
so, anyways, Lance, kudos to you and the team there at RIA for doing well, at least so far this year. So let me ask you
Yeah.
this
It
then.
could change.
It could change. That's why I slipped so far in
Yeah.
there.
So far, it's
Um,
been a good year, knock on wood.
yeah, yeah. So one of the things that you have always said that is kind of, I would say it's one of the bedrocks that you kind of pin your market outlook on is earnings and the
Yeah.
forecast for earnings. So goes earnings, so in theory has to go asset prices.
Yeah.
Um, Two things. One, you have just recently written a piece saying, does consumer spending drive earnings growth? So I want to let you surface the key insights from that. And then secondly, I want to talk about where consumer sentiment is going, because I just did an interview with Joanne Shu, who's the director of research over at University of Michigan.
Hmm.
And she has some pretty big concerns about where sentiment is going. So why don't we start with your piece there, though? So
Sure.
I'm assuming the answer to this question you've asked, does consumer sentiment drive earning growth, is yes, given how important you think earnings are. But again, things are nuanced. So go ahead.
Well, no, it's just, it fascinates me if you take a look at Wall Street's earnings. And here, let me, while we're talking about this, let me just pull up a screen here. When you talk about earnings and in particular the market itself, what's always interesting to me is that investors, or at least Wall Street, thinks that earnings just kind of magically appear from nowhere. And this isn't really the way things actually work,
They don't get
because
delivered by the earnings fairy?
well, that's kind of the way it seems, right? So here's a look at this is a log scale of earnings going back to 1936. And right now, earnings estimates are above the long-term peak-to-peak trend of earnings going all the way back to 1936. And what you'll notice is that earnings don't stay there very long. But yet, you take a look at earnings estimates going forward, they just never-endingly, they're always just going up. They're always optimistic in the future. So, if we look at earnings through 2026, they're expected to grow at double digits into next year. And so the whole purpose of this article is saying, okay, well, hold on a second. One thing we know is that Wall Street analysts are always wrong, and they always ratchet down their estimates as we get into reality, right?
Mm-hmm.
So, I said, so let's go back and talk about where earnings actually come from. And so as you just mentioned, and I've showed you this before, this is the black line is the annual rate of change in the S&P 500. The shaded area is the annual rate of change in forward earnings per share. And there's a very, very high correlation between the future rate of return in the market and future expectations. So goes earnings, so goes the market. So if you really want to know where the market's headed, start thinking about where earnings are actually going to be growing. And so the question then becomes very simply, where do earnings come from? Well, they have to come from activity that occurs at the top. This is just a sample income statement. So at the very top line, your very first thing, it says net sales. That's revenue. That's what they sold their widget. And then the second item is how much did it cost me to sell that widget? I get to my gross profit. I take out my operating expenses. I take down my depreciation, my interest on my debt, whatever. I get down to net income at the end. Net income is earnings. And then I take net income, divide that by my earnings per share, and I get earnings per share. So that's how I get to that number. And what we tend to forget is that it all comes down to supply and demand at the end of the day, and it comes down to the consumer. And so this is kind of this process that, let's say, Adam, you and I, we start a company today to build a widget. So the first thing we've got to do is we got to build some widgets. right? We got to do that first and foremost. So we've got to come out of pocket and we've got to go build some widgets. So we build some widgets out of pocket. Now we've got no sales at this point, but we got a widget and we got a big loss for the company because we're out of pocket money. So then we spend dollars to market. So we set up our TikTok account, we set up our Facebook page, and we start advertising our widgets. Consumers start to buy our widgets. We receive the revenue from that product sold. So now that we've got some revenue coming in, we've got demand now. So the original widgets we sold, they're gone. So now I've got to take that money that just came in. I got to build more widgets. I got to pay wages to the people that are building the widgets for us now, because we're building out our plant. We then got to pay our taxes. The remaining dollars are profits. Those profits broke down by EPS. We now know what our earnings per share is, and we start this whole process over again. But that's the cycle. And we forget that that's how earnings are created for businesses. And so this is why it's so important to pay attention to what's happening with personal consumption expenditures. We had this huge spike in earnings because we had this massive surge in personal consumption because of all the money we sent into the economy back during 2020, right? 2020, 2021, we're sending checks to households. We shut down the economy. Everybody's buying everything they get their hands on, toilet paper, water, whatever. And so we had this massive surge. And now, as that consumption is slowing back down to normal trends and going back to where the normality of economic growth is in the economy, earnings are declining and they're coming back to a more normal level of growth rate relative to earnings. So now, and again, there's a very high correlation, between PCE and the annual percentage change. The outliers are interesting because when you take a look at the outliers of the correlation between PCE and consumption, or PCE and earnings, it's the Inflation Reduction Act, it's the Biden stimulus, it's the COVID, kind of Fed bailout, post-COVID lockdowns, COVID stimulus override.
It's all central planner intervention. Yeah,
exactly. QE2, those are your outliers. So things that spark abnormal consumption outside of the economy is get there. Then, of course, the other side of this is all the manipulation that goes on with company books. This was a Wall Street Journal did a research they went and surveyed a bunch of CFOs, and they go, well, why do you cook your books? Basically, and this was the question of Wall Street Journal.
Why do you conduct accounting fraud?
Yeah. And they said, well, because we have to get our stock price up, right? So we do stock buybacks. We do all these, kind of accounting. By the way, up to 10% of corporate earnings are fudge data, right? And that's all in its terms of influence on stock price, outside pressure to hit benchmarks, inside pressure to hit earnings marks, influencing executive compensation, senior managers' fear for their career. So this is why, we look at earnings like, okay, you got to extrapolate all this stuff out that goes on, but that's the problem ultimately. And so this kind of this issue, and this is why we take a look at revenue growth as a function of reported EPS. We're now looking at revenue growth accounting for basically 75% as accounting gimmicks, 25% of revenue growth. So the vast majority of earnings growth occurs below the top line, right? Which is why we've seen such massive earnings growth despite such a slowdown in, economic growth has been roughly about 2%. It's been slowing, but companies keep reporting these massive earnings growth. And a lot of that has to do with what the manipulation that happens below the top line. But here's to your point, and to your upcoming interview, the correlation between consumer confidence and PCE is very high. And this big drop in consumer confidence heading into tariffs, now that's going to bounce. We're going to get a fairly good bounce in consumer confidence in the next few reports because of the ease off on tariffs. So a lot of consumer confidence really got hit because of the fear on tariffs. And now that that's gone, or at least resolved temporarily, we should see it. It's not going to go back to where it was, but, a bounce to, 75, 80 would not be surprising at all, just because of the relief on those tariffs. Now this consumer confidence gauge is a composite of various different measures of consumer sentiment. So this isn't the University of Michigan, it's in there. This isn't just the Conference Board, it's in there. There's also a couple other measures of consumer confidence that are in this gauge. So this is a very broad gauge of consumer confidence on the economy. So it looks different than maybe what the CRB or what the Conference Board or what the University of Michigan shows on theirs. So again, just keep that in mind. But lastly, I mean, again, this is why confidence is important, is because again, there's a fairly decent correlation between forward earnings and consumer confidence.
All right, super helpful. One thing I will qualify on that, Lance, is
Mhm.
two things. One, the interview with Joanne is actually out. So folks, if you want to
Oh,
watch
sorry.
it, you can watch it right after this one.
Yeah.
But from what I heard from Joanne, Lance, right now is, she's all about the surveys that University of Michigan puts out there.
Yep.
She concurs that really what's been driving this is a number of things driving it, but the big thing has been concerns about trade tariffs, their impact on
Yep.
the economy, um, and it's across political affiliation. So
Mhm.
even though there is a big difference in reported numbers from Democrats versus Republicans, everybody's worried. Um, and the delta between the two, it's not really that different than recent history. The partisan difference has grown over the recent decades, but in the past couple of years, that it hasn't really changed all that much in the data.
Right.
But she is not seeing any relief yet in the data and the feedback that she's hearing in these surveys. Doesn't mean, to your point, it may come at some point, but right now, the worries continue to rage amongst
Right.
folks. And
Now, she's with the conference board, right?
no, she's with UMich, University of
UMich.
Michigan.
Okay.
Yeah.
Yeah.
And
The University of Michigan has had a very big divergence from the conference board for quite some time. So it'll be interesting to see how this plays out.
okay. Um, and what's notable about the data right now is she's saying, one, yes, it's tariffs that is weighing on folks the most, but folks are worried kind of across the board about everything. They're worried about their wages. They're
Hmm.
worried about just keeping their jobs. They're worried about stock market prices. It's kind of across the board. And the other notable thing is it's all across the socioeconomic spectrum. So
Right.
usually you see the worries on the lower, on the mid to moderate or modest households. But now the affluent households are reporting very similar worries as well. So TBD, I did ask her, look, looking at the arc of your data, this is more leading information than lagging. How often does the future hard data catch up to the soft data here? And she
Mhm.
said, in general, it generally does. So
Yep.
she didn't want to get pinned down on any, prognostications for the stock market, which I totally understand because that's not her bailiwick. But I did get her to say that, hey, if the markets did roll over, in the next couple quarters because of these worries, would that surprise her? And she said, no, not at all, obviously.
Yeah. No,
So we'll see.
even like my chart showed you is that, you take a look at the consumer confidence composite versus, PCE, there's a very high correlation.
Relation,
Same
yeah.
thing for earnings. And, so yeah, if you put a lot of worries on consumers, and they contract their spending because of either, and look, we saw that in the employment report today. We had this really good employment report that came out this morning, had 139,000 jobs, right? So everybody's like, oh, look, the employment's great. You got to step back from that for a moment. First of all, you had big cuts to previous gains, so you lost about 70,000 jobs on the previous report, but the trend of employment is slowing sharply. The trend of growth is what's important. It's not the number, and this is a mistake that so many investors make as they focus on a number, and the number is not important. The trend of the data is what is important. And so, like for instance, looking at an inflation report from 1 week or 1 month to the next is meaningless. It
Almost
means nothing.
meaningless, yeah.
But what's the trend of the data? Is inflation rising or is it falling? Well, inflation is clearly falling. Take a look at personal consumption expenditures or the PCE report, clearly slowing. So all the data is saying the economy is slowing down. And if the economy is slowing down, that means consumers are under pressure. That means they spend less because they start to worry about job losses, these type of things. That's going to equate into earnings, and you're going to have slowing earnings growth, at the back end of this.
All right. Totally agree. And that's providing a great segue into the next topic I want to talk about with you is jobs.
Yeah.
Real quick before I do, two things. One, I just mentioned that, Joanne specifically noted that we're seeing a concern amongst affluent households that she doesn't see very often. Headline came out this morning. that Winnebago issued a profit warning. Winnebago's getting beat up for a while, but we've talked about kind of the toys indicator, right? The
Yeah.
things like RVs, ATVs, jet skis, et cetera, like the fun toys that you just don't need, right? And they tend to be a pretty good early leading indicator of a change in the economy. And we have seen now for several quarters those high-end toy companies really taking it on the chin, that demand for those products really does seem to be cooling. And that's a sign, in a lot of cases that higher end consumer is starting to be a little more cost conscious. And of course, we've seen other profit warnings from the really high luxury brands as well. So just one more data point there.
Yeah, Lululemon just got killed yesterday or today, actually.
Yeah. So also too, just before we move on, I want to just do a little showcase of personal gratitude here as we've been talking, as you've been seeing me off camera here, Lance. My wife delivered a little breakfast here for me, and it is avocado toast with a fried egg on it, made on a sourdough loaf that just came out of the oven about an hour ago. So I could not be more grateful for life at the moment, folks. I always, money and markets are important, but you really got to focus on the important things when you have the chance to. All right, so jobs. So jobs has been really interesting. So, as I said earlier, you're a big believer that's where earnings goes. That's where asset prices goes. And to a certain extent, where sentiment goes, that might be where earnings go, right? If consumers change their behavior based upon their beliefs today, then that's going to impact tomorrow's earnings. But something that's very correlated with future earnings is what the employment market's doing, right? If unemployment starts rising, if consumers start getting really worried about their jobs, that's when they really start retrenching their spending. And we're such a majority consumer spending economy that then has knock-on effects on earnings. So it's been really kind of a whipsaw week with jobs. So we had the JOLTS report come out, I think about a week ago, which was a pretty decent JOLTS report. Then we had ADP come out yesterday, the day before, I think maybe 2 days ago, and it was a really bad ADP report. I think it was like a third of what estimates were expecting it to be.
35,000.
Yeah, and then today's payroll, if you looked just at the nominal number, it was a moderate beat. So to your point, like, if you just took it at face value, you'd say, oh, okay, things are going pretty well. But if you dig below the numbers, you learn several things. All the previous information in 2025, all the previous data sets have been released, were revised downwards, right? So we're kind of back into that territory where, oh, we told you last month was a great month, but actually it really wasn't so good anymore, right? The gap between the household and the establishment surveys is now back, which does signify that we're probably overcounting the jobs like we learned that we definitely were in previous recent years. Full-time workers, the full-time workforce is now shrinking again. And even the part-time workforce, which had some growth, is pretty anemic, right? So we're not seeing a lot of real true job growth there. And that there's a lot of expectation, understandably at this point, that today's print, which is a quote unquote moderate beat, will likely be revised downwards next time. And given the size of the past markdowns, it's probably going to be a sub 100 print when it gets marked down, which actually would be a disappointing number if that number would have come out today, right? So there's
Thank God we don't pay attention to revisions.
Yeah, it's just crazy. But at least thank God guys like us still do. But it's showing that while there's still interest out there wanting to beat the drum, saying, hey, unemployment's great, it's still real low, the job market's real resilient. Those that are looking closer have some, I think, valid reasons to say, I'm not saying it's terrible by any stretch, but I'm not saying that this looks like a super hardy jobs market either. And we got to continue to watch this closely. Two cut things. What's interesting with jobs now is it's kind of like the market sort of wants to take the same conclusion no matter what the jobs data looks like. Jobs market looks weak. Oh, geez, then the economy is getting soft, and Powell, you better cut. Job market looks strong. Well, then Powell, why are you not cutting, right? You've been saying you don't want to stimulate inflation. We're fine, right? cut. So obviously, I think that's probably one of the reasons why the markets have continued to reclaim 6,000 here.
Can I stop you right there?
Yeah.
Right. I've been on a run for like the last 3 weeks on our real investment show talking about narratives.
Yep.
And that was such a great, piece right there. Is
I
like,
thought you were probably going to go there, which is, hey, that's a false, or that's a narrative
well,
of
no, no,
what?
I'm not saying it's
Yeah.
a false narrative, but this is the whole problem with the markets is that we need to assign as humans, like markets are up today. Well, it's because the employment number was weak. Well, not really. It's just that we've got a ton of momentum in the markets right now, and so markets want to go higher. People are trying to allocate capital. So, but we have to assign a rationalization to it for some reason, a justification for this, and it really doesn't have anything to do with that at all. It's just we've got a lot of buying momentum in the markets right now. People want to get money allocated, and so yeah, the headlines are great, but they're stocks are going up, so I'm going to buy, and that's what's happening. But again, as investors, we've got to have a reason why. We've got to rationalize it, and this is the problem with all these narratives that are going on. But I thought it was interesting today, is to your point, is that immediately the knee-jerk reaction to the employment report was it was stronger than expected. So that means the Fed doesn't need to cut rates. And so the expectation for rate cuts dropped and the market's rallying. Well, normally we rally because the Fed's supposed to be cutting rates. So that narrative is now flipped as well. And again, that just goes to show you the fallacy of the narrative is because stocks, now we're rallying because the Fed doesn't need to cut rates. And that makes no sense whatsoever.
Well, it'd be very interesting to see what happens from here. No surprise, Trump is now beating on Powell to stop being too late, Powell, and to get back to cutting rates,
Yeah.
and is now demanding a full point cut.
Yeah.
So,
And which is super interesting, by the way. So, one of the narratives that we've had going on here for a while is this whole weak dollar thing. And there's actually a really good setup that's coming right now for I'm starting to kind of start to think about building a dollar position in our portfolio. Because if you take a look at what's happening, central banks globally right now are cutting rates at the fastest pace since in 2025 that we've seen really since 2024. So what's interesting is the ECB just cut rates for the eighth time. And yet we're talking about the weak dollar means it's a loss of U.S. exceptionalism and money flows are going into Europe right now. And so supposedly they're a lot better than we are at the moment. But if that's the case, then why is the ECB cutting rates for the eighth time? Why is Germany experiencing some of the highest level of bankruptcies they've seen since the financial crisis? The economic growth in those countries are not great, and they're slowing down dramatically. So why is that good for the dollar? Well, as we talked about before, the whole reason the dollar moves up and down is because of where we store reserves. And so where do central banks store their reserves? Where do pension funds and hedge funds and all these other people store their reserve currency? Well, all of a sudden now, if the Fed's not cutting rates, so we've got short-term treasuries sitting at 4.5%. We've got the 10-year treasury sitting at 4.5% ish, and all of a sudden rates are coming down in Europe. I've got a double bonus now to go buy U.S. Treasuries. And in fact, there's just a graph out today. We've had some of the largest inflows into U.S. Treasuries that we've seen in several years, 163 billion year to date. So this is the third biggest inflow into Treasuries. Makes complete sense because now all of a sudden I can go buy a 10-year Treasury at 4.5% or a 5-year Treasury at 4.5%, whatever it is. And I get dollar appreciation ultimately when the dollar, which is very oversold now, starts to recover. So as more flows go into U.S. Treasuries to capture that higher yield, that boosts the dollar. So there's a very interesting trade that's setting up as the Fed continues to hold off cutting rates. That's making the attractiveness of U.S. Treasuries relative to other sovereign nations much more attractive at this point than they were just a few months ago.
Interesting. So again, to your caution about buying into narratives, the whole nobody wants to own U.S. debt, right?
It's not really true.
You're missing out on the party. Yeah. Okay. Well, look, just one last thing I want to say about employment for those that are interested in where it may be headed. I've got both Michael Kantrowitz and Darius Dale on the docket to come on at some point over the next, I think, week and a half on this channel. Both track employment very, very closely and where we are in the employment cycle. So just letting folks know, we're going to get their latest updates on that in the not too distant future. So those should be two very interesting interviews coming up here. All right. Well, look, as we start to wrap up here, I got a couple last topics before we get to your trades and our rant, Lance.
Okay.
One, I just want to note it. I'm sure by giving voice to it here on this channel, I'm probably killing the emergent trend. But you and I have talked about gold from time to time on this channel, Lance.
Mhm.
What we haven't talked all that much about is silver, and silver. The way the precious metals complex tends to move when it enters into a bull market is sort of like a whip, where the gold price moves first, but it moves the least in absolute value, or sorry, in percentage moves. Then the mining complex is kind of like the middle of the whip. In fact, the major mining companies are the first half of the whip. The junior mining companies are the further part of the whip. So those both move, they follow gold, so they move after gold starts to move, and they tend to move further percentage-wise than gold because they're leveraged plays on the metal. And then silver is sort of like the tip of the whip, where it moves the last, but when it does move, it moves the fastest and the farthest percentage-wise. That's what sort of historical price action tells us. So silver has been lagging both gold and the miners in terms of its price movement, and it's been consolidating and for the longest time couldn't break above the $35 an ounce price level. Well, on the futures market side of things, it did yesterday, and as of today, that price movement is continuing. We'll see how long it hangs in there. Again, I might be jinxing the whole thing by even talking about it on air here.
Yeah,
But
you're kind of picking it where it's, pushing 3 standard deviations overbought. Last time it was here back was in October, and it went from 32 to 26.
yep.
So you're
So
you're you're
that
you're
could happen
touting it
again.
at the top.
I might be top ticking it right here, folks. I
Yeah.
just want to note it so that if in case the breakout actually does manifest from here,
Oh, it's already broken out. It's
we
not that
ignore it.
silver's already broken out. So it's already done its breakout. Again, it's extremely overbought here. But we talked about gold previously needing a pullback, and you had a very nice pullback into really kind of late Mayish, early June, and formed a very nice bottom. So you had a really great entry point for gold back in kind of, late mid-Mayish, third week of May. You had a really great entry point. And so it's actually about to turn up on a buy signal. So you should get a decent buying opportunity here to add to gold. In terms of that, we'll probably do that in our all-weather model. GDX miners are really overbought here. They need to pull back to around 40 for another entry point on those guys.
Wow, I might need to get the smelling salts for some of our viewers here, Lance, that you just said something that could be interpreted as
Oh no,
positive
I
gold
trade
for
gold
gold.
all the time. No, I trade gold all the time. It's just
I know
normally
you
when you
do. I'm
talk about
teasing you.
gold is extremely over, just like silver, right? Silver's doing this. Well, normally that's when everybody's already in, right? That's not the buying opportunity. So you want to try to buy this stuff on pullbacks, when it happens. And you've had some decent opportunities to pick up gold here at cheaper bases. But don't
Okay,
forget,
great.
I just talked about a month or so ago. It was like, hey, you need to take profits in gold because it's going to pull back. And you had a very nice pullback in it.
Great. Yeah. Well, no, look, Lance, you continue to do what you're doing here. You may be completely proven validated on, what might happen with silver from here. And I'm
Oh,
not.
I don't really track silver that closely. I'm just telling you this is just I'll just show you real fast. I mean, just, typically this is just kind of, where we get into. This is a chart of iShares Silver Trust, and you're pushing extreme deviations. Last time you were here was again back in kind of early November, but silver's got a really good volatile trading pattern to it. Whenever you're 3 standard deviations overbought, as you are now, that's been great opportunities to take profits and get out of it, because you typically get a pullback to its kind of running moving average, which is, kind of looking at like a 200-day moving average example. You get really nice pullbacks, but all without fail, 3 standard deviations overbought are always points to sell.
All right. Well, this will be really interesting to
So
see what happens here. And look, I'm not clearly making any hard predictions or guarantees of silver's price direction from here. All I know is the precious metals investing community has been watching the 35 level with silver
yeah.
very intently for the past bunch of months, and the fact that it's broken above it is notable. Now, to Lance, that might be the signal that, okay, we've reached the maximum zenith of our standard deviations and it's about to go through a big correction. Or we may see that silver, is entering new territory.
Sure.
And from a technical standpoint, a lot of folks have said, hey, when silver crosses 35, it does not have a lot of resistance for a good while
It
from
doesn't.
here. Yeah.
That's a true statement too.
Okay. So anyways, I just wanted to get it on the board here so that no matter what it does from here, we can say we've at least been, monitoring it for
Sure.
our folks that have interest in that. All right. And then this has nothing to do with money necessarily. But a headline I was happy to see. I got to be honest, I haven't really read the depths of it, so forgive me for being light on details here. But part of RFK's new uh, Make America Healthy Again program. Apparently, the government is now insisting that nutrition be taught in med schools that are receiving federal funding. And I just want to mention this because this is a saw that I have beat on for many, many years, as a lot of viewers know. I'm from a family of doctors. I studied pre-med undergrad. The plan was to go to medical school. At the last moment, I decided not to apply. And that's what ended up getting me on Wall Street, which because I literally had to figure out something else to do at the last moment there. But as I have learned about, what really constitutes good health, and certainly functional and sustainable health, a huge part of it is nutrition, right? It goes back to the old saying, I don't know if it was Epicurus or not, but uh, what is it? Let medicine be thy food and food be thy medicine,
Yeah.
right? It's one of the absolute best ways to avoid a lot of chronic health diseases is to, get your nutrition right, your diet right. And knowing what I know about the medical education system, most doctors don't receive a single course in nutrition, right? So one of the single greatest sort of preventative measures we don't prioritize in the modern
Yeah.
medical system. So I'm glad to see that it looks like we might be beginning to make that a more of a priority.
Yeah. No, look, I mean, it's interesting because if you go on TikTok or social media, there's some of the kind of the bigger categories are on nutritional healthy eating, right? Cottage cheese has had a huge comeback. For you can use cottage cheese to make everything from cheesecake to, blueberry muffins to biscuits. So, anything you want to do is you want to make more high protein, more health conscious. And it's great, right? I mean, the whole problem with GLP drugs, which are GLP-1s, these weight loss drugs, is that they work fine while you're on the drug, but as soon as you come off the drug, you gain all the weight back because you never changed your eating behaviors and your nutritional values and those type of things. It was always kind of fascinating to me. If back in my early days, I used to build health and fitness facilities, like Lifetime Fitnesses and those type of things. Um, and it was always interesting to me because once we would build a facility, then we'd interview nutritionists and stuff to come in to work, and it was always interesting because nutritionists were never thin people. And you'd hardly ever see a thin, a thin fit nutritionist, which I always thought was kind of contradictory to the whole idea of nutrition. So, but it is good now. We're starting to see a much bigger trend change in terms of social media and views and news. Starting to push this idea of healthier eating. Shake Shack, as an example, just went to using pure tallow to fry their French fries, which is a great move. We're starting to see
I
more and
love
more
that. I
companies.
applaud it. To me, it's kind of like your make better bad decisions. Like
Yeah, yeah,
going to
it
get
is.
burgers and fries
It's
at Shake
look, if
Shack,
you're gonna eat
not necessarily the
fries,
best decision, but
yeah, yeah. But if you're gonna eat French fries, it's better than McDonald's, right? So,
yeah.
but again, it's we're starting to see more and more companies. I think it was I don't know if it was Fruit Loops or somebody came out the other day and just took all the red dye out of some of their cereals.
Yeah, it's
Um,
that and the candy maker that makes Skittles. I don't know if it's Mars or whoever, but yeah, they're
yeah,
getting
yeah.
the
But
whole
so
red dye.
this is all great stuff. I mean, I am all for, getting people the ability to eat better, have better nutrition because it solves so many more chronic illnesses. Again, you think about the fact that, when I was growing up, the cases of autism were not that common. And now you have like 100,000 cases a year. Why? That we should not be just developing this massive surge of autism cases. It has to be linked to something. And I don't have the answers for that, but there's a lot of things that we're seeing more and more of in our society, ADHD, ADD, all these type of things that we're prescribing drugs for to fix, but we're not really trying to decide and determine what the root cause is. And does that come down to, medications? Does it come down to food quality? What is it that's causing some of these effects that we're seeing more of in society these days?
Right, right. So, we'll wrap this up and then finish up here, folks. But that's why I'm so heartened by this, where to me, it's been one of those things, kind of almost like fiscal discipline, where it's like
Mhm.
you can see what is needed so clearly, and yet we have not been doing the obvious low-hanging fruit, right?
Right.
And here with health, like nutrition is just such a clear part of it, and the fact that we have not even been educating our health practitioners in it, right, who are our stewards of our health, right? We're not arming them with kind of the most obvious and in many cases, I think, the most effective weapon, which is just, hey, you know, eat right early on in life, and the vast majority of health ills that you would have had otherwise, you probably aren't going to have. And I don't
Yeah.
have to really say this, I don't have to convince too many people watching this because, as we said, Lance, a lot of them are, 45 or older. We all have a living memory of the 80s and the 70s and the 60s. Just pull out your family photos. We've got some family birthdays and milestones coming out here. So my wife's been, pulling out a bunch of family photos from the old days. And humans almost look like a different species when you pull out a photo from the 70s, especially like a beach photo or whatever, right? And you're
Yeah.
like, oh my gosh, like everybody today would be considered thin, or maybe even like, ooh, that person looks kind of a little unhealthily thin. And it's only relative to where we are right now, right?
Yeah.
You look at that same scene today and you're like, oh my gosh, there may have been one person there that was a little pudgy back in 1970s, but by today's standard, that person would be on the thinner side of,
Yeah.
a crowd of people. So, anyways, glad to hear that that's going on. All right, Lance. So I do have a fun rant I want to get to, or I think a meaningful rant. First, trades. What trades, if any, have you guys made at RIA over the past week?
None this week. We've got about seven. I went through this with you last week
You
as
did.
well, talking about the coming AI kind of innovation that's happening, and there's going to be some great opportunities to play on that. But again, we're just kind of waiting for pullbacks here, so we've got kind of positions ready to go. But none this week. But we've got a good shopping list built right now.
Okay. And just for folks that didn't watch last week, from my notes, Lance, I have you guys are looking for entry points on Meta, BlackRock, Raytheon, Palantir, Google, Amazon, and natural gas pipeline companies and infrastructure
Right.
companies. It's lists
Yeah.
more or less the same.
Yep. We own, like, for instance, we own GE Vernova, which is on the nuclear side, but we'll probably add like a Comico or an Oklo on a pullback. On the infrastructure side, BlackRock is an easy way to play infrastructure because they invest heavily in infrastructure through their private equity. So, those are kind of the things that we're looking at going forward. But again, just we're going to kind of restructure the portfolio a little bit as we kind of move forward, and start looking more towards this kind of coming AI trend that will be working a lot on building out infrastructure and a lot of the underlying source of the economy. Again, as we talked about last week, every $1 billion in infrastructure is $3 billion of economic growth, which is why the whole deficit narrative is probably wrong.
Okay. So, Lance, we did ask the audience last week
Mhm.
for feedback on if they'd want to see sort of a special episode or even a webinar done on. I think we sort of pitched it as energy investing, but it kind of wrapped AI and infrastructure into it, which
Sure.
is the demands of AI are going to create a huge amount of demand for the electrons to power the AI, which is going to require more infrastructure as well. So, is that something that you and your team might be interested in,
Sure.
doing a little more open kimono for us? Of, hey, here's why we're excited by that trend. Here's what we look for in companies to invest in for that trend, and maybe even talk about a couple names.
Yeah, yeah. No, we could just do that next Friday. I mean, we can just kind of go through our thesis that we're doing. Maybe even drag in Michael, for the conversation, do a three-way. But yeah, I mean, we can certainly do that and kind of go through our thesis and kind of some of the companies that we're looking at, and why we're looking at those particular companies.
Okay, let's talk to Michael, and we certainly do it in this spot, or we could do a special event, which
Sure.
we could use the interactive part of it, which is let you guys talk, but then actually give people the chance to ask questions. Because I think for
Sure.
something like this, there's probably going to be a lot of audience questions that get surfaced.
Sure. Absolutely.
Okay.
Yeah.
All right, folks, if you remain interested in that, just let us know in the comments below. But I'm going to assume enough interest is there to pursue this with Lance. All right, so if you remember way back to when we started this video, Lance, I introduced you as the bellicose Lance Roberts. That was the theme. We talked a lot about the pervasive war theme going on in the world right now. But it got me thinking about an important question, which is, when do you punch back, right? Usually the best way to win a fight is to not have it in the first place, and I've heard you say that many times, right?
Yeah.
But sometimes in life, you do have to stand your ground, right? Either for justice, it's the right thing to do, necessity, like, look, I got no other options, my back's against the wall, I got to fight here, or for precedence, right? Like, hey, if I let myself, get defeated now, that's just going to keep going forward. I gotta draw a line here, right? I had a really fascinating discussion yesterday, or recorded one, with Michael Every. So folks, this is the video that's going to come out tomorrow, the day after this one releases. Michael has been the expert on mercantilism and the world shift from globalism now towards more nationalism, protectionism, really old school mercantilism. He'd been predicting this for years, long before Trump got elected and an increasing number of national folks get elected around the world. So Michael really is one of the top world experts on this. And a lot of what we're seeing right now worldwide on the national scale, as these more nationalistic candidates are winning around the world, to a certain extent, that is a real pushback. That's the moderate and modest classes starting to fight back and say, you know what, we've been taken advantage of for too long. Globalization did not help us out. Wealth divide's been increasing to the point where we're not going to take it anymore, and we're going to start, bringing in these disruptors, bringing in these people who are putting our country's interest first. Even if you look at the Russia-Ukraine battle, those are sourced in that decision of, when do I push back, right? The folks on the Russia side would say, look, NATO encroachment just kept happening and happening, even though we were told it wasn't going to move an inch to the east, once the Berlin Wall fell. And once Ukraine looked like it was going to get let into NATO, we had to act, right? That's what the Russian side would say. Of course, the Ukraine side would say, look, we have to fight back. These guys freaking invaded our country, right? So we're seeing, lots of examples kind of at the meta level of when that decision was made to fight back. On the personal level, professionally, I've just sort of been reflecting on this. Like, I've had to stand up for myself at times, and I think I've told enough times on this channel how I eventually walked away from the whole corporate world, corporate ladder, the corporate rat race. So I've reached my point where I felt like I had to get the fists out and change things. I've also had a number of examples, and Lance, I think I've shared this with you privately, of times where I've had to hold my fists in frustration, where I really felt like I was being treated poorly by certain players, but for the my long-term peace of mind, realized the battle probably wouldn't be worth it, right? So I've learned where I've had to step back from the line, even though a big part of me emotionally wanted to do it. Personally, I grew up like you, Lance. I had an older brother, and he was 4 years older than me. We did not get along growing up. And we fought a lot, and I would lose every fight, right? He just had 4 years worth of growth on me. And what I learned through that process, though, was a really valuable life lesson, which is that you don't have to win the fight. You just have to make the fight not worth having, right? You have to learn how to inflict enough damage that the perpetrator is going to just think twice and say, you know what, I'm probably going to walk away from this fight the victor, but I might be limping more than I want. And you know what, I just think I won't start the fight in the first place. So where I'm going with all this, Lance, is, look, you've been a fighter your whole life, literally, right? MMA fighter and whatnot, but you've also, you've been a scrappy guy entrepreneurially. How do you determine when to fight back and when to walk away?
So I was laughing because when I was growing up, my dad gave my brother and I boxing gloves for Christmas, but just
You
one
told me
pair.
this, just one pair. So you guys
Yeah,
each
it was
had.
one pair. Yeah, I always got the left one. So yeah, he was 5 years older than me, so he beat me up a lot more than not. Which is why probably one of the reasons I got into martial arts eventually, just so I could win the fights. But no, so the first thing you learn when you're fighting is you never commit the first punch. And the reason is, kind of there's a few reasons to it, but the most important one is once you commit that first punch, you are off balance because you've had to stretch to reach that to make that punch, which gives them opportunity to counter react. And so you're always better off allowing them to commit first to a fight. So because it gives you so many more options. Once you're committed to the fight, whatever it is. And once you've made that first move, you have no options except to complete that first move. They have tons of options. They can step aside, they can step back, they can move in. They have tons of options to counter with. So you're always better off. And this works in business, this works in life, this works in everything you do, which is, we all get frustrated at times, and the first thing we want to do is just lash back out at something. So, something happens at work or something happens at home. Our first immediate response is to lash back, say something that we shouldn't say something we don't mean, whatever it is. Or, in business, we just, we cut the customer off, whatever it is. And it's like, I don't want to deal with you anymore. You're done. Well, that typically does a whole lot more damage than if you would be patient, let them commit to the argument first, whatever it is, and then start trying to resolve that issue in a manner. Because again, once they attack you for whatever base it is, your wife's mad. So right now, my wife is mad at me because I forgot to tell her I was going to bed last night. And so I went to bed. I was really exhausted. It had been a really long day. And I went, crawled in bed, and I forgot to tell her I was going to bed. So she's not speaking to me this morning because I forgot to tell her I'm going to bed. So I've got to go after this interview. I've got to go apologize for going to bed early. But this in life, relationships, and business, the best thing to do is not to commit that first attack on a problem, is to let whoever it is have their first shot at being upset, being aggressive, whatever it is, because now you have a ton of options to counterbalance that attack on you and saying, look, hey, I get you're a really valuable customer. You're a great friend. Let me fix this problem for you, or not. And if you
Right.
want to attack back, you certainly can.
Right. So,
So
so interrupt, but to your
go.
point there, it takes two people to be in a fight. And if you have
That's
the
right.
choice to not add the second person and diffuse it instead,
Mhm.
most of the time you're much better off. Totally agree.
Yeah. Yeah. And so again, but you have options. But again, there are times to fight. And then, I've been in situations before where, you have to commit to the fight and not, but again, I don't have to commit first, but once the attack is made, you've got to go through the process. In business, had that situation. We've had to, I've had to file lawsuits and be super aggressive and spend a ton of money to get to an end result. And that's terrible. It's costly, it's timely, it's emotionally draining. It's not, by the end of a fight in a lawsuit, and Adam, you know this very well, you're like, was it even worth it at the end of the day, right? Just other than just walking away and washing your hands. But yeah, sometimes you have to go through that process of making things right. But you just want to make sure before you commit that fight, that's your last option, because fight in every fight, whether it's physical, business, mental, personal, whatever it is, nobody ever leaves a fight unscathed. And you've got to be willing to say, I'm willing to do this fight, and I'll take the beatings and the bruises that go along with it because I need to win this fight for some particular reason. But just understand that you're not going to come out of that unscathed. You're going to lose money. You're going to lose time. You're going to lose friends. You're going to lose whatever it is. You're going to lose that. You're going to lose in that fight. You just have to be willing to understand that, will the result of that fight be worth the fight itself, as you were saying, Adam?
Yeah. And everybody I've talked to that has been involved in a lawsuit has generally said, man, if I could go back, I wouldn't do it again. Like
Yeah,
it was just,
absolutely.
it was just so horrible. And to your point, Lance, I think you said, hey, Adam, you know this really well. Just in case folks get the wrong idea, I've never been in a lawsuit. I think Lance has counseled me at a time where I was thinking whether I should initiate one or not. And having listened to other people's pain, decided not to. Um,
Exactly. Yes,
yeah,
and thank you for clarifying, but that was my point. I just mean in business, you've
yeah.
been in a fight just like I have, and it's not fun.
No, it's not fun. And so again, I think the key takeaway in the vast majority of the times is you are often better finding ways to de-escalate or just walk away and say, look,
Yeah.
yeah, I'll take some pain of walking away, but it'll be a lot less than if I go the nuclear route. But that being said, and this is kind of what I want to end on, Lance, is just there are some times where you do need to stand your
Mhm.
ground. And I'm curious for you personally, like on what issues do you draw the line and say, it doesn't matter at this point, I have to fight because of X, integrity, whatever. Like
Mhm.
what are the things that make you say, I don't want to do it, but I'm putting the gloves on?
My family, my business, or me personally.
Yeah.
So, if you attack my family, I don't care what the cost is. This is it's like I've told my daughters, I said, if anybody ever lays a hand on you, you call me because I'll come with a shovel. And, you know, and that's not hyperbole. I mean,
Not to hit the guy with, but to bury his body. Yeah, I get it.
exactly. And yeah, I'm not, and that's not hyperbole at all. I mean, there are certain things in life that must be defended. And, my family, my faith, my business, my dear friends. I mean, you as a particular, if something happens to
Oh,
you, I'm
thank
going to
you.
be there. And this is one thing I've tried to always instill in my children, which is they have 100 friends, right? It's like my daughter had a graduation party a couple of weekends ago. She had like 60 friends show up for this party. And after the party, I sat her down and I said, so how many of those people are actually your friends? She says, I'm friends with all of them. I said, okay, let me ask you a question. I said, if tomorrow something happened and you needed one of them, which one's going to show up? And she started thinking about it. And that's the difference between a true friend and an acquaintance that I try to instill in my kids. Like, Adam, you could call me at 2 o'clock in the morning on Saturday morning and say, Lance, I need you. And I'm going to be on the first plane out. Right. I mean, there's not going to be a question. You don't have to explain to me what the problem is. Always
Mhm.
reminds me of the movie The Town with
It's
Ben Affleck and um,
Jeremy
Jeremy
Renner.
Rayner. Yeah, is like, I'm not going to tell you what's happening, but just get the car going, right? And
Right.
that's what
And
a
of course,
true,
the guy just pauses and then says, like,
yeah,
where are we going? Like, he doesn't even ask the question of why are we
yeah,
doing this or whatever. It's just, okay, what time do I need to be there? Yeah.
exactly. And that's what separates out a true friend. And so those are the people I'm willing to fight for, and it doesn't matter what the reason is, I'll fight for it. But outside of that, I'm a very passive guy.
All right. Well, I think very similar to you. I think a lot of wise words there. Again, folks, this is coming from a true fighter. I mean, a guy that spent a lot of time traveling. Was it Europe largely doing MMA?
Europe and Asia mostly. And I think that's the other thing is I always run into people that like to fight. Now, look, you put me in a ring in a sporting event, oh, I'll fight you all day long. I love the competition, right? And so you put a pair of gloves on me or no gloves, I don't care how you want to do it. You want to get in a ring and go. I always tell my sons, like, hey, if you feel froggy, you want to jump, let me know. So, because I'm the first, if you just want to fight just for the sake of fighting for fun, oh, I'm all there for it because I love the competition. But, once you've been in enough fights and once you've fought long enough, like I have the confidence that I don't care who you are, I'll beat you in a street fight. And I'm not worried about that. Even at my age, I'm not worried about it. And maybe that's cocky at my age because I'm getting pretty old, but I'm still in the gym every day. I'm still working out. So, I feel pretty confident. Um, you know, but once you have that, once you're confident in your capabilities, right? I don't fear other people. So when
Right.
people, want to try to start a fight with me or whatever, I'm complete. My ego is not offended. I'll just walk away from say, hey, have a great day. Peace be with you. Love you. Got to go. Right. And I'm happy to walk away from a fight any day of the week just because I know what the outcome ultimately is probably going to be. I might lose. Right. But I have a pretty good idea of what the outcome is going to be. And there's not really a reason for fighting that fight. And I think that's the biggest thing that we have to figure out as individuals is before we get into the fight, is it really worth the fight? Is the damage that's going to be caused to you personally and to the other person, regardless of what it is it really worth doing it? And in most cases, if you just take a breath and calm down for a minute, because we all get, we all get emotional, but if you can set those emotions aside for a minute and really think about what the fight is, in most cases, fights are stupid. And they're generally over a misunderstanding that's easily solved by just a little bit of communication.
So you, as you normally do, Lance, I was about to wrap it up and you gave me like several different points I think are really important here. Um, let's see here. Well, okay. First off, I appreciate your support there as a good friend and right back there at you, buddy. And it reminds me of this old saying that a good friend will help you move, a great friend will help you move a body, right?
I think right. Actually, I think it's a good friend will help you move, a great friend will help you move twice.
Yeah, that's asking a lot of your great friend. I think rather help you move a dead body.
Yeah,
But
me too.
a
Oh,
couple
by
of
the
things.
way, my offer to come help you out does not include moving.
Okay. Um, uh, well, it's interesting you say that. Again, topic for a different day, but I believe, and you kind of let the cat out of the bag a little bit last week, and I got to be careful because a lot of people in my life don't know this yet. But my wife and I have gotten to the point where odds are pretty good that we are going to be leaving the state of California um, for the cost of living and the taxes and whatnot. And it really was one of these. We just sort of had this moment where I looked at it and said, you know what? I think I have to fight back at this point. I think I've
Mhm.
been pushed into a place I do not want to stay in, and this
Right.
is the time for me personally to draw the line, right? So more about that later. But yeah, I'm having my own personal,
Yeah.
line in the sand moment there. But one thing you said about, you don't fear people being in the ring with them physically, right? And
Right.
I fear being in the ring with you, Lance, for a whole bunch of reasons, but it is for your experience. So folks who've been watching for a while may remember about 2 years ago, for about 8 months or so, I during COVID, when all the gyms were closed, I was having a boxing guy come and give me boxing lessons, mostly for conditioning, but he was, beginning to teach me the fundamentals of boxing, and I was really enjoying it. But you learn a couple of things right away. Um, you would think it's the simplest thing in the world. It's just defending ourselves is kind of programmed,
Yeah.
genetically in our minds. No, not intelligent fighting, right? And just to get the basics is really tough. Like just to help people understand, if I were to tell the average person to throw a punch, they would throw it from their shoulder. As you know, Lance, it comes all from your legs and
Mhm.
twisting, right?
Yep.
And it takes you a long time to really get that wiring down to learn to throw a punch that way. Um, but the point is like, just like people go to a firing range and you spend an hour there, and by the end you feel like I'm actually pretty good at this, right? And then people put some time pressure on you or anything else, and all of a sudden you're just firing, right, left, and center.
Yeah.
After a couple of months, I kind of felt like, all right, I've got these basics down pretty well. It's kind of getting a little boring, right? So the guy's like, all right, well, here, let's put on the helmet. Let's have you spar. Oh my God, the second somebody is throwing punches at you, everything you've learned goes out the window, right? So it takes a long time before you get the experience to be able to slow the fight down, to then be able to do the strategic part of fighting, which you obviously have mastered, right? Which is it becomes really like a physical form of chess, right? Oh,
Yeah.
how does this guy fight? What are his strengths? What's he doing wrong? Where are my areas of opportunity, right? What feints, what blows can I take here, and how much can I keep in reserve to then go after him offensively here, right? And I never got anywhere near that stage, and so I know how hard it is to get there, given what I've been doing. And the reason I'm talking about all that is um, yeah, we both have said, look, the best thing to do is to avoid the fight. But the times you want to be in a fight, you don't want to be figuring out how to fight on the fly, especially if your opponent is experienced. And I'm not trying to encourage people to go get like, physical fighting skills. Although I think it's a great workout, and I think I actually would love to do more of it going forward. Um, but even like life and business. Have a good relationship with a good lawyer, have a good relationship with a good insurance person to make sure that you are armoring up with the right forms of insurance in advance of a potential legal or business battle or whatever, so that if indeed somebody does take some swings at you, you already kind of have a general sense about how you're going to defend yourself, and you hopefully have assets in place that can cushion or deflect those blows before, any potential damage comes to you, right? So as you were thinking about that, one of the things I've been actually thinking about doing on this channel at some point is a special section on insurance. Long-term viewers have heard me talk about, umbrella insurance, which I think everybody should have. It's a great, super affordable defense to have. But when I started my businesses, I had to get knowledgeable about business insurance. It took me a while to really find the right type of insurance agent I was looking for. But there's all sorts of different layers of insurance that you can put in place so that if somebody comes after your business, you've hopefully got a much better chance of surviving that or walking away unscathed. So, folks, if there's interest in that, I don't know how many. I know we have a lot of professionals in the audience. But if folks would be interested in hearing more, both on the personal and the business side, about forms of insurance to use so that you don't enter a fight naked, let me know in the comments section if there's enough interest. Maybe we'll do that going forward. But this whole point about having the experience, just like you have a National Guard, right? You hope your country never gets invaded, but if it does, you really want to hope you've got people that know what they're going to do, right?
Yeah, no, look, I mean, it's just, it's interesting to me is like, I hear a lot of people is like, I own these assets, because in case there's ever the end of the world thing, I want to be prepared. So, I've got my food stored, I've got my water filters, all this type of stuff. Kind of, they're doing great job prepping, but they don't go as far as to understand, well, how do I find fresh water? How do I go and kill an animal and skin it and, do all these type of things? How to, herbology and understanding biology and the things that are happening in the world outside. Survival of anything is about preparation. And to your point, is that it's great to say, oh, I've got an insurance policy, but great. Well, how does that insurance policy fit into your business structure? Have you structured your business in a manner to protect it? So if you're a real estate investor, do you have multiple LLCs that are, holding each one of your properties, and you've got a holding company on top of those LLCs to make sure that your risk is diversified away from lawsuits that get filed from a renter, getting injured in one of your houses, and that doesn't affect all of your property. So, it's understanding more than just the fact you've got insurance. It's also how that interlays with all the other aspects of structuring your business for protection as well.
I agree 1,000%. I
Yeah.
agree 1,000%. And just to your point on sort of the survivalist mindset, we've talked about this before, but like even just home defense, right? The people that say, "Oh, well, I got a gun," right? If you and forget if you've been to the shooting range a couple of times, like if you haven't actually been through a training course on how to use a firearm, some guy breaks into your house, you go for that gun, you are highly likely to be more of a danger to yourself and the people you're trying to protect than you are to the invader.
No, exactly right.
Yeah, I am. Uh, Past business, we would go out to this place in outside of Pahrump, Nevada. It's a firearms training course out there, and it's run by all these former special forces guys. And two things about that story. One is I remember the first year I was there. So I've been several times, and I still I feel like I'm still more of a danger to myself than I am to any invader. But there was a recently retired police sergeant in the lane next to me, and he had brought out some guys from his police station or whatever to come do this with me. And by the end of the first day, these are pretty rigorous days. By the end of the first day, he turned to me and he said, "Adam, I don't mean to freak you out." He said, "But you've got more training now than most of the guys in my department do," which was just scary from sort of a law enforcement standpoint.
Yeah.
But to my point about, you go through it's like 3 days of like 8-hour days. I mean, this is a lot of training they have you do, and they're trying to really instill kind of the muscle memory in you for all the key things that you need to do. And at the very end, they take you into a mock civilian environment. So it's one of those, it's supposed to be a house, and there's different rooms, and guy tapping on the shoulder, go, 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 right? And they have you go around a corner, and they have, these mannequins there, or these dummies set up. And you get to determine very quickly whether it's a good guy, a bad guy. Sometimes it's a bad guy with, taken a good guy hostage or whatever, right? And obviously your thing is to shoot the bad guys. And when you go in there under those pressure conditions, you are just killing everything. You are just, I mean, you're killing way more hostages than you are good guys. You just it's amazing how everything they've just spent those 3 days telling you has gone out of your brain, right?
Yeah.
And so it just underscores to me that you know, anything that is important to you in terms of defending you and yours and those you care about, you have to practice. You have to pregame. You don't want to go into the fight figuring out on the fly how to do it, because as you've seen in the ring with
Yep.
inexperienced fighters, as I've seen on those shooting ranges and stuff, you honestly are more likely to seal your own fate than you are that of your opponent if you're going in raw.
Yeah. So, and if you ever want to do that again, let me know. I'll go with you.
Thanks. I don't have a burning desire to do it, but I probably should, because it's been a while, and it would be super fun. And if we did it, actually, if we did it, we'd let all our followers know, because this was something that everybody could do, and it is, standing out in the hot sun in Nowheresville, Nevada. It doesn't sound like a lot of fun to a lot of people, but for those that go, it's a really fun bonding experience.
Yeah.
All right, my friend. Well, look, another great week. Well, look, if you think one of the best ways to, give yourself the greatest advantage in any fight is to get as close as you can to Lance Roberts, even if it's just watching him on this channel week in and week out. Let him know that by hitting the like button and then clicking the subscribe button below, as well as that little bell icon right next to it. Importantly, if you want to, beef your portfolio up so that it can defend whatever slings and arrows any opponent, market or otherwise, might want to throw at it. Highly recommend that you get good guidance from a good financial advisor, one that takes into account all the issues that Lance and I talk about in these weekly videos. If you've got a good one who's doing that for you, great, stick with them. But if you don't, you'd like a second opinion from one that does meet that criteria, perhaps even Lance himself and his team there at RIA, then feel free to schedule a consultation with one of the financial advisors that Thoughtful Money endorses. These are the firms you see with me on this channel week in and week out. To schedule one of those, just go to fill out the short form at thoughtfulmoney.com. Filling out the form only takes you a couple seconds, and the firms will be in touch with you right after you submit. Lance, my friend, another great week.
Yep.
Things are getting crazy. I mean, I shudder to think what has changed in the world since we started recording this. But we'll find out in a few seconds, and whatever has happened, you'll make sense of it for everybody next week. I'll give you the last word as normal.
Yeah, no, it has been interesting. When I told you that it'd be interesting how this market started out really strong this morning while, we started this conversation, and we've given up about half those gains now. So it's only, coming up on noon Central Time. So we still have about 3 hours, but, we were up well over a percentage point this morning. We're only up about, 60 bips now. So, it'll be interesting to see if these gains can hold through the day. So again, we're still in that trading range, hasn't really broken out yet. So just be cautious with your trading until we have confirmation.
Yeah, and don't worry, Lance, there's plenty of time left in the day for some tweets that are going to blow all our minds. I know that some folks are going to scream, we didn't talk about bonds this week. The 10-year is just about to hit 4.5% again, Lance, but we'll pick that up next week.
Yep.
Thanks so much again, buddy.
That's it.
All right, everyone else, thanks so much for watching.